Welcome to 𝐂𝐓𝐇𝐄𝐑𝐄𝐑𝐄. We talk about investing, finance, a professional women. So current time of 9:37 a.m. on Eastern time on the 5th day of August. Ethereum $100,682, up about close to 5% so far. Respect over crypto market and the equity market, across the board, we're quite, trading on the opposite side of the spectrum. Seems like on the equity side, we are across the board on all the indexes down about 1% so far. While on the crypto side of the house, across the board is up about 1 to 7% on the highest, which is driven by Ethereum Classic, leading the effort at the moment, up close to 7%. And respect to what are the catalysts that's driving the market across the board is quite, a mixed bag. Is one is like basically driven by two macro catalysts. One is obviously from the payroll number that came out this morning. The other one is depictions or just more media affectation around the foreshadow action that the Feds will be performing going forward. So the first piece of the equation would be the payroll number. Obviously, it came out. So on a high level synopsis of the report, non-farm payroll has risen by 528,000 for the month, and unemployment rate was 3.5%, which is easily topping the Dow Jones estimates of 258,000 and 3.6% respectively. And the wage growth has also surged higher as the average hourly rate jumped by 0.5% for the month and 5.2% from a year ago, higher than estimate again. And traders are now pricing in a higher likelihood of the 0.75% or like 75 basis point rate hike for the next FOMC meeting in September. Again, we have a gap, so there's no FOMC meeting in August, but we are going to be getting the CPI report on the 10th, which is basically next Wednesday. So obviously, it's a kind of a dilution of a positive news, which technically with respect to the job numbers that came out today, it's definitely showing some signs of strength from the job market. But with respect to the higher rates that we're foreshadowing, the 75 basis point repeatedly, this will be a triple repeated rate hike, or even worse, right? 75 basis point is what we expect. We might go all the way to 1% if the previous two rate hikes on the efficacy perspective does not come through. We will ideally see higher rates, right? So again, it's propelling up, but obviously get normalized down. At the same time, today's a Friday, so it's also mitigated on that aspect as well. So across the board, again, right? Depending on your emotional or I guess investor sentiments around what we've learned so far, I would say today was more of a premature positive report from the job numbers. Ultimately, I think a bigger factor will be the rate hikes, right? We need to see did the two rate hikes work this time, or does it not work at all? That we need to do it again, or make it even more aggressive, which I think overpower the job numbers that came out today. Okay, so let's just dive right into it. Respect to recording time of 9:40 a.m. on the Eastern time, we are at 1684. So right now, basically rebounding because of the positive job numbers being mitigated. We should ideally surge up even higher, but because of the obviously 75 basis point news that got or more aggression coming from the Feds again, is driving more of a mitigation. So right now we are at the 1700. Just try to get up there. And right now we are clearly try to hold on to the thread, right? You can see that clearly with respect to our next level up on a resistance perspective will be somewhere around 65 out of 70 on the RSI scale. And at the same time, we are quite interestingly, if you look closely, we have crossed down, but also try to cross up again, right? So we'll see how sustainable this is, right? But ultimately, we understand that this is, we have been stretching up for quite some time. So despite the consolidation that we're seeing so far, I don't foresee a major correction, but I do not foresee a major surge either because we're relatively extended, right? But again, on the weeks and months out, we're still seeing, signs of bullishness. We're about to cross up. At the same time, we still have the room to go up to as the next level of 55 out of 70 as the next resistance, right? And then on monthly, obviously, we're plateauing. So across the board, again, daily, see some sort of a normalization. And I think as we're heading on to the 10th, which is the CPI report, we should ideally see some volatility ahead of us, right? And in respect to Bitcoin, we are, clearly getting blocked. We're still ascending on a gradual fashion, which is something I like. We still have some room to run up to the next level of 61 out of 70 on RSI scale. We've crossed up for quite some time now, so looking for some sort of a cross-section downward. Again, right, not a major correction, but some normalization coming down to anywhere like 21,500. Makes a lot of sense, right? And I think we need to do that. But on the weeks out, right, you could see that clearly about to form a golden cross, which is something we like. And then monthly, we could see that we are plateauing already. So again, daily, which is like days out, right, which makes sense. We should see some volatility, matching with the timing of the CPI report that's coming out on the 10th. And then as we get over that hump, ideally, right, we should ideally see some positive pressure ahead of us. Okay. And this is applicable across all the other spectrum. Just like take a look at Classic because it's pumping quite nicely. You can see that depth cross top reform, right? We have a large separation that needs to be kind of filled at the 67 out of 70. On a weekly right now, you see that we're clearly getting rejected already. So beware. Be aware of the volatility ahead for the Ethereum Classic. And knowing the fact that we are going to be getting blocked soon. And you can see that we clearly saw that blockade already at 45 out of 70. And the rest of them are trading on similar fashions, just like Ethereum, right? With respect to daily being, we should see some short-term volatility, but weeks and months out looks quite bullish from here. And then on the equity side, obviously, is a mixed bag again, right? Some of the large tech stocks and small cap stocks, on small cap high growth stocks are definitely going to be more hinder in comparison, right? So let me know if any questions on this one. Today was a positive job number being overshadowed and overpowered by the Fed's aggressive rate hikes coming. But again, these are speculations from the market, not confirmatory. The job number is confirmatory from July, but are we going to be going with a 75 basis point or 1% all over again? All right. Well, appreciate you. Have a good day and take care.